Imagine this scenario. A thriving business, experiencing growth and expansion, is suddenly hit by a catastrophic event. A fire, perhaps, or a severe storm. The damage is extensive and the cost of recovery is astronomical. Now the question is, does the insurance policy cover it all? Or does it fall short, leaving the business owner to shoulder the financial burden? Welcome to today's topic, where we dive deep into the world of insurance, specifically the perilous risks of underinsurance for businesses. Picture this, a bustling bakery in the heart of Brooklyn, New York. The owner, a passionate entrepreneur, had invested his life savings to make his dream come true. One unfortunate day, a fire broke out, engulfing the entire bakery. His insurance policy, however, only covered a fraction of the total cost of damages. The remaining costs, enough to make anyone's heart sink, were left to him. Or consider the case of a tech startup in California. They had an insurance policy, but it didn't cover cyber risks. One day, they fell victim to a cyber attack, resulting in a loss of crucial data and a significant downtime. The financial consequences were severe, and they had to bear the brunt of it due to underinsurance. These are not just isolated incidents. According to a study by Marshall and Swift Book, about 75% of businesses in the US are underinsured by 40% or more. This means that 3 out of 4 businesses are at risk of facing financial hardships in the event of a catastrophe. Underinsurance can lead to dire consequences. It can result in businesses closing down, employees losing their jobs, and dreams shattering into 1,000 pieces. It's not just about the money, it's about the livelihoods of people, the dreams of entrepreneurs, and the economic health of our communities. Now think about the alternative. Comprehensive insurance, while initially seeming more costly, provides a safety net that underinsurance does not. It offers financial security and peace of mind. With comprehensive insurance, businesses can bounce back from disasters quickly without the crippling financial burden. In the case of our Brooklyn bakery, had the owner opted for a more comprehensive policy, he could have rebuilt his dream without dipping into his personal savings. And our California tech startup could have recovered from the cyber attack without facing severe financial loss. The key takeaway is this: underinsurance is a high-stakes gamble. It's betting against the odds, hoping that disaster will not strike. But when it does, the cost can be devastating. On the other hand, comprehensive insurance provides a safety net that keeps businesses afloat in times of crisis. It ensures that even when the worst happens, there's a way to recover and move forward. So the next time you consider cutting corners on insurance for your business, remember the risks. Remember the bakery in Brooklyn, the tech startup in California, and the 75% of businesses that are underinsured. Consider the true cost of underinsurance and make the smart choice for your business. Because in the end, the cost of comprehensive insurance is a small price to pay for peace of mind and financial security.